Welcome to Lawyer Business Advantage. This podcast is dedicated to helping attorneys earn more money, get better clients, and spend more time with family. I'm your host, Alay and founder of law firm Success Group. Smart business guidance for small law firms begins in 3, 2, 1. And it's my pleasure to welcome back to Lawyer Business Advantage Ryan Kimler, owner of Net Profit CEO and the host of the Net Profit podcast. Ryan, how are you doing?
I'm doing well. Thank you for having me on the show today. I am excited to dive into today's topic.
Yeah, I appreciate you jumping in. I know you're not, health-wise at the top of your game, so thanks for taking some time to have this conversation with us. We just had you on for two awesome episodes, one on hiring, the financial components of that, and another one on just kind of, the benefits of having a CFO in your law firm and how they can make a real difference, and a terrific story that you shared with us. Today, we're going to talk about something a little bit different. We're going to talk about financial partners that every attorney should have in their law firm. And Ryan, there's four of them that you've identified. What are those four? And tell us about how that all works together.
Yes, absolutely. So, and this is really for, a firm as you grow, especially as you get to that $500,000 mark and beyond. Some of the positions you'll need a little bit earlier. But especially if you're planning to grow and get towards that seven-figure mark, you'll need these four positions. So first one, probably everybody that's listening, should know is you need a bookkeeper. Um, And, the bookkeeper's job, they're basically going to categorize and account for all of the transactions that happen in your business. So as you pay bills, as you collect payments from customers, right, they're keeping track of all of that sort of data. All right. Second position that you're going to need is you need a good tax preparer, someone that's going to help you, especially as you grow, even with your quarterly estimates, so that you're staying on the right side of everything, current with the IRS. Nobody wants trouble with that. Okay, so a good tax preparer that probably does your business taxes and ideally your personal taxes as well. Ideally, they do both. That's what I see in most circumstances. And then if they're really worth their salt, they'll probably give you some advice on some ways that you can save on taxes as well. Um, there's a few practical ways that you can, do that I won't really dive into today, but that's the kind of person you should be working with on the tax side. Third position is a part-time CFO, someone to really help you analyze the numbers after the bookkeeper's job is done, identify areas where your business can grow and improve, become more profitable, have more cash flow. That's really the third position. And then the fourth position, and a lot of law firm owners miss this, a lot of business owners in general miss this fourth position, and that is working with someone as a retirement advisor. I don't use the term financial planner because you don't necessarily have to have like a CFP or someone that sells life insurance. I use the term retirement advisor, someone that really has your best interest at heart, someone that is willing to work with you and not just put you in a standard, package that they do with all their other clients. Someone that really will work with you and put you in investments that you know and understand and are comfortable with.
Yeah, those four make a lot of sense to me. And I think I mentioned in the previous podcast at Law Firm Success Group, we kind of had this tiered approach where as the firm grows, um, we start adding on different advisors and different investments into the firm in terms of personnel. And to your point, I think we advise that any firm that's starting has a tax preparer already, like from day one, and their
Yep.
first person they bring on board is that bookkeeper. Oh my gosh. Attorney entrepreneurs, if you're listening, I don't care if you can do it on your own. That's not the point. A bookkeeper is going to do it cheaper. They're going to do it faster, and they're probably going to do it better than you can. And if they can't do it better or faster, they can certainly do it cheaper. And just to give you a quick personal example, because I can do my own books too. I was starting off my coaching business. This was over 10 years ago, working a lot of hours, working late at night. And lo and behold, I was doing invoicing at like 11 o'clock at night, and I started making mistakes on my invoices. And that was like a clear sign that, oh my gosh, I need to hire a bookkeeper so I can do this, but my time is better spent elsewhere. And then as the firm grows, Ryan, in terms of the fractional CFO or the part-time CFO, which is what you do, and net profit CFO. When is kind of the right time for you to really come into a law firm?
Yep. So smallest size that we typically work with is around $500,000 a year in revenue. All right. That typically does work, especially as you start to grow towards $1 million. You're going to run into some financial challenges where you can really use some guidance. And it makes sense to have a part-time CFO on board, helping you work through those things, helping you make sure that you're staying profitable. And also, as we talked about in one of the first episodes, helping you make sure that when you're hiring and growing a team as you move towards $1 million, that you're doing so profitably. So that's typically the size where that piece gets added in. And when,
Awesome.
and I would also say, when that happens, the CFO that you hire, they're really the linchpin of the financial team. A lot of times, when we come in, sometimes law firms have us bring other pieces in, bookkeepers or tax preparers, because they don't already have a good one or a good situation. But typically, no matter what, even if you have all those pieces, um, we do a lot to communicate and make sure that the whole team is on the same page as far as when the books get done, what we're looking at forecasting wise for a quarterly estimate for taxes. The CFO is really the leader and the linchpin in the team, and so that should take a lot of the responsibility off of your plate as the owner when you transition and make that part-time hire.
That makes sense. You mentioned 500,000. What is it about that 500,000 annual revenue mark that makes it appropriate at that time to bring you in and not potentially earlier?
Yeah, so the $500,000 revenue mark, we have worked with a couple companies a little bit smaller, but typically when you get to that $500,000 mark, that's where I see some mistakes end up getting made is when you kind of get to that size. And typically, you've made some hires, and for affordability for the price that we charge, that's also the area where we see it's easy for us to get you at least a 2x return. Before that, it's a little bit harder, but that's the minimum that we want to get our clients when we're working with you as a CFO. Is we want you to have at least a 2x return in profits on what you're paying us. So that's not in revenue, that's in profits. I just want to emphasize that. But that $500,000 mark is typically where we see that and where that starts to become affordable and starts to make sense.
Awesome. Awesome. And I believe you offer, we talked about this last time, you actually do a lot of work for free up front. If it's the right size client, you'll go in and do an assessment and benchmarking exercise, which will really help them uncover a lot of that return on their investment without, before they've even paid you anything, right?
Absolutely, yeah. So I do cover the cost of an initial financial assessment for the clients that are, really interested in working with us, just so that they can see a little bit of what it's like and what they're getting, and I can kind of explain the process of, what we do when we come in and start working with you and how our process works. So yeah, absolutely.
Okay. Now let's talk a little bit about that retirement advisor person that you suggested.
Yep.
Um, just out of curiosity, why did you bring that up?
Well, a lot of business owners miss out on the retirement piece, right? I think when I from the conversations that I've had with business owners, and to be really, really frank, a lot of business owners think their business is worth more than it's worth. And they
Pretty
think
much
that
every
they're
business owner thinks it's worth more than it's worth.
well, there is a lot of, I'm not going to say everyone, but the majority. And, a lot of them think that, I'm going to have this exit and that's going to set me up for retirement. When in reality, when your business is not worth as much as you think it's worth, that exit's really not going to happen. And so planning for retirement, obviously, with compound growth and things like that, the sooner that you start, the better off that you're going to be. And again, it's just an area where, as a business owner, especially, it's really easy to get caught up in when you're a growing firm owner. I had to grow the business this year and I had to invest cash and I'll get started on retirement next year. But doing something and building the relationship with all four of these positions, I think starting early and building relationships with and finding the right trusted advisors, the earlier you can start, the better off that you're going to be, no matter what, even if you don't need them today.
Yeah.
Um,
Mm-hmm. Go ahead.
Yeah. So starting early. I mean that's why I bring that up because most owners miss it until it gets too late, and then you're really sucking a lot of cash out of your business to make up for lost time. And also, finding the right people can take some time as well.
Yeah, I always dread those calls I get when it's a potential client on the other line, but they're an attorney who's 3 years away from retirement, and what they share with me is, look, I'm 70 plus, I'm 3 years away from retirement. I really need to double my take home income. Can you work with me? And most often, as much as it breaks my heart, the answer is no, because we have to rewire that person after having practiced law a certain way for so many years and running a business a certain way for so many years. We can't do that. But here's what a financial or planner or retirement specialist could actually do for you. I recently got a bit of good news. Here's actually a good story that you won't hear about very often, where we were sitting down with our financial advisor and evaluating our business interests, and he actually gave us some good news. He said that potentially we could be starting to retire in 5, 10 years. I was like, wow,
Wow.
that wasn't expected. I expected to be working for at least another 20, 25 years. Um, so occasionally they give you some good news, It's not always doom and gloom and you've got to like
Sure.
save all this money and tighten up on all your expenses and all of that. Oftentimes it can be some good news too. And you're spot on when it comes to your point about valuing a business, especially when you're thinking about valuing a law firm.
Yeah.
Um, because attorney entrepreneurs is easy, in terms of law firm valuation, it's by no means an exact science. And valuing a law firm for court, like if you're valuing a law firm for a divorce, is a very different exercise than if you're valuing a law firm for sale. Because now, if you're going to sell it, there has to be a buyer on the other end willing to pay for it. And that's a
Yep.
totally different deal. For example, you can have an estate planning practice that is booming, but you may have a very hard time selling it for no other reason than an acquiring firm doesn't want to take on the malpractice obligation of acquiring all of those estate plans that you've done in the past, God knows how many years. So the valuations can really vary wildly, and it's a lot of it's internal succession where you're bringing on other partners and transitioning it to them. And acquisition, oftentimes they don't pay what the firm is worth, so there's a lot that goes into it. So spot on, Ryan. It's best not to bank on a really, really large, rich exit.
Yes, absolutely. Absolutely.
And so when someone's coming in, when is typically the best time for them to bring in that retirement planning person?
Yeah, so I always say the sooner the better, right? I mean, even if you're, let's just say that you're a $500,000 a business a year, right? And you've got a good you're on payroll and you've got a good profit margin of, let's say 20%. Okay. You should be taking some of those dollars and not just distributing it all to yourself to spend on a yearly basis. You should be investing some of it for your retirement moving forward. And so I always say the sooner the better, right? I mean, even if you're a solo and you're doing $200,000 a year, right? You should probably be looking for those individuals and find some trusted advisors that you want to work with in the future, and just start putting away a little bit at a time.
So here's a question I have. When you've got, these four financial experts or advisors that are on your team, you've got your bookkeeper, your tax preparer, your part-time CFO, and your retirement planner. Um, Maybe paint a picture for us about how those four individuals should actually be working together with a client.
Yeah, for sure. So the bookkeeper and CFO are going to have to work most closely together on a monthly basis, um, because the bookkeeper should keep the CFO updated with new expenses that are happening, any new transactions that are happening in the business that are unusual, or maybe any adjustments in payroll or anything like that, any new trends, right? And the CFO is going to catch that in their review as well. Um, so that's where the most communication has to take place. And then from there, the CFO with their forecast and projections, communicating with the tax preparer, letting them know, hey, these are the taxes that we're probably going to be expecting this year, so they can work with the business owner on quarterly estimates. And then also, I would say the CFO and tax planner and retirement advisor all need to work together to help the business owner reduce taxes and use some of that reduced tax money for, saving away for retirement, and having the retirement advisor in the loop on what profits are going to be and what the kind of the cash flow and earnings the owner is going to have, so we can set up a good retirement plan as well. So all four pieces, they do need to work really closely together, and they do need to communicate together. And that's kind of what it looks like.
And oftentimes I find that that actually isn't the case. And so it oftentimes happens that, the financial people that the owner brings into the firm or has working for them, um, they don't even know one another. And
Yeah.
so, yeah, how would you recommend? What are some things that owners can do to introduce their financial experts to one another and to get them working effectively together with the client?
Yeah, so I think it all starts with an annual meeting, annual get together. And really that meeting should probably be at least an hour. And really just talk about, plans for the business, and those financial professionals should be able to talk together and talk about how that impacts, their position, and how that would impact other positions as well. And a lot of times, that meeting should be, also kind of co-led by your part-time CFO. Maybe not in the first year that they're there, but after you establish a relationship with them and they kind of get a lay of the landscape, I mean, especially starting in year two, that annual planning meeting should really be co-led by the business owner and the CFO. And that's what that should
Awesome.
look like.
Really, really cool. And what if those financial partners that you have in mind are that are actually working for the client aren't willing to really work together? What do you do then?
Yeah, so I think if you're, obviously with the four positions that I've laid out, there's not overlap most generally, right? I mean, there are some CFOs out there that do play in the tax space. I'm one that I don't, right? And I think even if you are a CFO that plays in the tax space, if that's not your job with this client, you might give some advice there or things like that. But otherwise, you should be pretty hands off. And, I think if you're a business owner and you've hired these four professionals and there's really not job overlap, you know, I'm not I'm not in competition with any of the other three positions. If they're not willing to, collaborate and work together, then I think you as the owner, you need to think of, the person that's not willing to collaborate, like, do they really have your best interest at heart? Because they are, rather they're, they might be hired in an outsourced capacity, but they still are part of a team. They are part of your advisory board. They're part of your advisory team. And if they don't want to work together and don't want to be a good team player on that team, do they really have your best interest at heart? Are they really the best fit for you to work with moving forward? Those are the kind of questions that I would be asking, and why.
Yeah. Well said. Well said. Spot on. And if, attorney entrepreneurs, you're listening to this and you're thinking, I don't know if I want to pay hourly for four different financial people to all meet together about me. I'm paying a lot per hour for all of them to collaborate. You absolutely should be. And that is going to be a fantastic investment because it's actually going to save you money in the long run. By getting by getting your financial team on the same page, they're going to spend less time kind of chasing their tail and trying to figure out what to do and what's in your best interest and guessing. Now they're going to know. And so knowing that, having a plan that's well put together amongst all the four um, team members will help them move forward with confidence and less deliberation. And that is going to save you money and you're going to get a better result. Right, Ryan?
Yes, absolutely. Yes, when done correctly, well worth the investment. Um, and having those advisors, in your corner, especially when you need them, really, really, really important. And yes, it might be, a high hourly cost on paper, but you've also got to remember that's probably only happening one time a year. And, if you do it right, in the additional profits that you're going to have and tax savings, you're probably easily 10xing your return on that hour. I think 10x is probably a low bar for that. So it becomes a no-brainer.
Yeah, yeah, totally. I think that's right. Tell us a little bit about the Net Profit podcast and what you're
Sure.
looking forward to with that.
Sure, absolutely. Yeah. So the Net Profit Podcast is all about helping small business owners improve their profits. You know, at the Net Profit CFO, I do have a growing team and we are taking on more clients, but I can't work with everybody. And so, I wanted to start the podcast as a way to have a platform to reach more listeners, reach more business owners, and really help them continue to have a growing and more profitable business, even if they weren't working with me one on one. And so the Net Profit Podcast, I bring on guests that are typically service providers. Sometimes I'll bring on current clients, but we're always talking about growing your business and improving the profits in it, making it more efficient, and really helping owners have more take-home pay and a better lifestyle. And so that's all about, the Net Profit Podcast. I am super, super excited to continue that. We typically have a show a week, and when I finish out this year, this will be my second year doing it. I've had some phenomenal guests on the show, including yourself, Alay, and I am just super, super excited to continue to have great guests on that show. And I learn from every single guest that I put in the guest seat, and I know my audience does too. And so I'm super excited to continue that and keep growing it for sure.
Awesome. And Ryan, if people want to reach out to you, what's the best way for them to do that?
Yeah, best place to go is netprofitcfo.com. In the upper right-hand corner, I've got a link to my personal calendar. You can book a complimentary 30-minute session with me. We'll sit down and have an initial conversation about your business and probably pick out something to help you, go look at and grow your profits. Um, and then from there, you can also Google Ryan Kimler, last name Kimler. My LinkedIn profile is going to come up, pretty close to the top there as well. That's another great place to reach me, but those are definitely the top two.
Fantastic. Ryan, it's been great having you on the Lawyer Business Advantage podcast. Thank you so much.
Absolutely. Thank you for having me. I appreciate it and love doing the show.
And that's a wrap for this episode of the Lawyer Business Advantage podcast. One thing that would really help both us and other new potential listeners is for you to rate this show and leave a comment in iTunes, Stitcher, or wherever you tune in to listen. And I want to hear from you, so connect with me on LinkedIn and let me know what you think of this episode. And if you are a solo or an owner of a small law firm, and you're looking to earn more money, attract better clients, or reduce your stress, we would love to talk with you to see how we can help. Request your free law firm assessment by visiting lawfirmsuccessgroup.com. Again, that URL is lawfirmsuccessgroup.com. We look forward to talking with you soon. Thank you for listening. My name is Alay Yajnik. Until next time, remember, you can seize freedom, you can embrace happiness, you can build your perfect practice.